All right. Hello, everybody. Welcome back to another episode of Daily Palantir Live Shareholders Meeting Club. This is episode number 0022. I see on Twitter that you guys give me the thumbs up, so the audio should be good. I'm using an external mic on Twitter today, not my headphone mic. So actually, the audio should be really better than before, than it's ever been. So just let me know if anything, but Twitter audio should be good. And you guys should be able to hear me. Thank you, everybody, for being here on YouTube. We've got a lot to talk about. Today was a very interesting day. Obviously, in the world of Palantir, we have hit $20 for the first time since November 2021. It has been more than a year since we have seen $20 on their share price. And obviously, for long-term shareholders that have been here for a while, that have been here, through the thick and thin, when the stock was at $6, $7, all the way now until $20. It's a really special time. It's a really interesting time to be here right now, and it's really exciting to talk about. So a couple of things I want to get out of the way, and then we got a lot to discuss. I want to go through a bunch of different topics. I'll be here until 10 o'clock. I also want to get some people on the live stream. So if people want to join at the end, I think for 10, 15 minutes, I'll send the link, and then people can join, and we can talk a little bit more. Stock price action. That's the first thing I want to talk about. I'm going to pull up the chart right now. We're going to go through what happened with the stock price today. Second of all, I want to talk about the Dan Ives report, because for some reason, that Dan Ives report, I believe, is continuing to have an effect on the market. I could be completely wrong about this, but we got into an interesting discussion on the weekly podcast that a lot of people had some opinions about on the timing of this Dan Ives report. So I really want to discuss that and kind of understand, is there any truth to what's going on here? And then finally, I want to talk about is the stock overvalued or not? Because I think that's an incredibly interesting discussion. A lot of people are sitting on gains and they're thinking, hey, do I want to hold this, or do I want to cash out right now? I am up many thousands of dollars, and I'm looking at those thousands of dollars, and I could do a lot of things with those thousands of dollars. And so it's a question that I've struggled with as well. Bottom line, I said this on Twitter today, and I said this on the video I made today. I am not selling. I honestly don't want to sell until 2030. I want this to be one of those things that plays out. And so I actually sleep like a baby at night, because if it just falls, then I get to buy more at 11 or 12 bucks, where it seems like a pretty good deal given the new macro environment we're getting into. And if it keeps going up, then I get to enjoy the ride. So for me, the process has been pretty simple, but I want to discuss more and get other people's opinions as well, and see what people have to say. So a lot to get into. One housekeeping thing. I know I didn't go live last week. One of the main reasons was because two things. Finance Junkies went from 10 p.m. to 7 p.m. last week. So that completely screwed up my schedule, because I'm supposed to be doing this at 9 and then Finance Junkies after, but Finance Junkies came before, and that made some switches. And then in my personal life, I had a couple things I had to finish last week, just a bunch of different things late at night that I had to do. And so it got really hard doing it. It should be back to 9 p.m. I think we should aim for 4 times a week. So Monday through Thursday, not on Fridays, because Friday we have the weekly. So I think we did like 20 days straight. And then last week, it just, because of the time switch with Finance Junkies, it like completely messed up the schedule for Palantir Daily. But now that Finance Junkie schedule is going to be on till November. So that's set in stone. So so Palantir Daily Live Shareholder Meeting Club, whatever we're calling it, should be good to go 9 p.m. every day. All right. So here we go. Let's get into it. Let me share my screen. Thank you, everyone, for being in the chat. Let's share the Webull. Palantir. So the interesting thing that happened today, and I want you guys in the chat to also share your story with the price action. I think every single day, if you're monitoring a stock, you basically have a certain story that you have with the price action. And that story kind of determines how your day even goes. Today was the first day where I woke up at 4 a.m. in a very long time. I have not woken up at 4 a.m. And have been productive, honestly, in a year. I mean, 7 a.m., 6 a.m., but not 4 a.m. Today, I'm up at 4 a.m. Like, I'm ready to go to bed. I am dirt tired, but I woke up at 4 a.m. I went to the gym at 5 a.m. Okay, so I was productive for an hour. Then I went to the gym. Now, how am I doing this gym membership? It's a $30 a month subscription, which is actually kind of reasonable for a gym now that I think about it, given all the facilities we have. But I'm justifying the $30 a month because of my Palantir gains. So hopefully Palantir does not shit the bed, and these gains continue to stay, because these paper gains are allowing me to justify $360 a year for the gym. Now, I'm at the gym. I'm getting ready to go on the treadmill. Or actually, I'm at home, right? 4 a.m. I look at the clock, or look at the Robinhood, and Palantir goes from 860 to like 880, 1880. And I'm like, what is going on? Like, it was already at 1840 on Friday. Now it's at 1880. Like, it's already ran up after hours on Friday. Now it's running up even more pre-market on Monday. It's supposed to sell off. It's not supposed to continue the momentum. And it seems like there was this pent-up demand for the company. Then while I'm at the gym, 6 a.m., by the way, I ran 6.5 miles, averaged 13 minutes per mile. Some people may laugh, some people may not, but like, hopefully we can get that down to 10 minutes a mile over the next couple months. The stock said 1910. And I tweeted, I'm like, look, I don't know if this is going to last, but it's at 1910. This is kind of crazy. I don't know why it's here, but it just blasted through 19. Then the market opens, falls a little bit below 19, and just comes roaring back through 1920, 1930, 1940, 1950. It's like we were doing the entire, history of the 20th century or something in Palantir stock price. Wow, that joke was pretty amazing. I've got to say, that was a pretty good joke. And then we got into the actual roaring 20s where we hit $20 after hours, as you can see on the chart right here. It was pretty amazing to see that. Now we ended in 1997, but we hit at $20.05. I think that was the top after hours, which is pretty phenomenal. I mean, I personally did not expect us to get to that level right there. And I tweeted a bear picture of us at $20, just like, wow, we actually hit $20. Now, why is this important? And why does this really matter? Well, a couple of reasons why I think this happened. And I talked about this on my video today, and I want to get everyone's thoughts in the comments as well. I believe that what Dan Ives said in that report, and we'll talk more about the timing of that report, but overall what he said in that report, and this is what I said in my video today, I believe he's looking at his institutional investors, and they're looking at him. They're like, Dan, we pay you a lot of money. Can you tell us what stocks to invest in? And Dan's like, well, I gave you NVIDIA, I gave you Tesla, I gave you Microsoft, I gave you Google, and you're up a lot of money. And they're like, that's true, Dan. You did tell us to invest in these stocks in January, and we're up a shit ton of money. However, we're fucking rich, and we have hundreds of millions of dollars more to invest. And we don't want to invest in NVIDIA at $1 trillion value. We don't want to invest in Tesla at $900 billion. Can you find us something a little cheaper? We can overpay a little bit, but we don't want to pay trillions of dollars for NVIDIA or Tesla right now. And I think Dan is like, okay. I'm getting paid by these very rich people, these high net worth individuals, these institutions, to be able to find them the next big thing in tech, because I'm a tech investor. He's not a fintech guy. He's not an energy guy. He's a tech guy. And he has an obligation, a duty, one would say, to be able to find the next best stock pick, or to straight up tell them, look, it's a bear market. There's no stock you should be investing right now. Sell it all. Dan has been very bullish on this idea that we are in the fourth industrial revolution for AI. And I think every statistical analysis I've seen about the enterprise spend for artificial intelligence is nearing $4 to $5 trillion in the next decade. Now, are those going to be true? Time will tell. And I want to see more of these studies every day to really check my biases. Because if it's not 4 trillion, then this whole thesis falls apart. If it's not multi-trillion-dollar types of opportunities. And so I'm studying the market every day. I'm reading a lot of stuff every day to try to figure out, is this the case? Everything I read, whether it's Bloomberg, whether it's Wall Street Journal, whether it's TechCrunch, whether it's Gartner reports, it all seems to say that we're getting into a pretty big market opportunity for AI. And maybe it all is just hype. Maybe it is. But as of now, it is consolidated to say, look, this is a really big market opportunity. A lot of people are going to be spending. His institutional clients are pretty aware of that. And as a result of them being aware of that, they want allocation. The rich people do not let their money sit in the bank and die to inflation. They want to put their money in shit that compounds growth. And Dan gets paid a hefty sum of money to recommend those companies. So in my opinion, what I think Dan has done and why Palantir is rising even more today is because he's looked around the market space. And if I gave you the restriction that says you can't invest in the big seven, the magnificent seven, you have to invest in another company, what is going to be that company if the goal is AI exposure? Which in this market, it seems like tech is looking for AI. To be honest, I would tell you biotech. Biotech is actually where you should be going. Josh Wolf, he's the partner at Lux Capital. He went on CNBC today and he had a really good segment basically breaking down the bull case for why AI is actually going to accentuate biotechnology at hyperscale. If you just take it at a basic level, if you have to make a cell or synthetically create DNA, like there's so many different ways that artificial intelligence actually does that. The problem is the time horizon of that is unknown. Right? It might be 10 years, might be 20 years. It's probably not 5 years. And biotechs are more risky. So biotech really is the bull case. Dan Ives can't recommend that. So if you take away all the biotech stocks and then you look at what's left in the S&P 500, what's left in, the top 40 companies in America, what other company would you recommend other than Palantir? And I think this is the interesting thing going into earnings that all of us as investors have to grapple with. Now, if you're holding till 2030, you really don't have to grapple with anything. You can just sit back and relax and see what happens. But if you're trying to time it or sell or just trying to speculate on what the price could be, we have to grapple with the fact that outside of the Magnificent Seven, what companies are left that can provide investors, institutional investors, AI exposure? There's C3 AI, maybe there's Snowflake. There's some private companies, but if you're not well connected, you're not going to get access to things like Databricks, especially not at valuations that are reasonable before, the venture market takes it to a different scale. So what's left? I mean, seriously, I would like to know in the chat, what is left as a pure play AI company? It seems like Dan's analysis has come to the conclusion that it is Palantir. And that's why he put out this $25 report. And this $25 report is sending shockwaves in the system. I mean, I spoke to a manager. I tweeted about this. I spoke to a guy who manages 30 million bucks in Texas, which to some people is a little bit of money. To me, it's a lot of money. But this guy, the reason I got the Dan Ives report is because he sent it to me. So he's pretty well connected in these circles, right? Like the reason I was able to send it out to all of you guys, by the way, if you haven't got it, DM me on Twitter at @AmitIsInvesting with your email, I'll send it to you, is because he was able to send it to me. And he's saying that when he's talking to his institutional clients, he bought a lot of shares of Palantir at $7. They are asking for the same questions that Dan's institutional investors are asking, which is where do we get the AI exposure? Where do we get the AI exposure? And so to him, he's managing 30 million. Dan is an analyst. He's not managing a fund, but he's talking to people that have many, many millions of dollars. It's the same question. Where do I get AI exposure? And Palantir is the name that pops up. And Palantir has actually performed up almost 200% year to date. So it's like kind of got the legitimacy, at least from a stock perspective, to be able to say, hey, this is a stock that's not stagnant. It's not alone. And then when you really look into the story, it's like, holy crap, there's a lot going on right here in the context of Palantir. I want to read a tweet from Grogu that I think magnifies the extent of the opportunity. He said right here, this is a really good tweet on the context of Palantir. So he says, each new client Palantir closes a deal with is them creating new addressable markets for themselves. But you were too busy measuring mom and pop shops that hold invaluable data, and that's you and your dumb analysis on Palantir. Cheers. And he has another tweet here about the TAM. If I can find it, I'll find it a little bit later. But his point is in that tweet is that there is massive TAM in terms of total addressable market opportunities that Palantir is creating intrinsically within these new industries. And so that's a technical way of understanding it. But you look at a lot of these different fund managers that are trying to rationalize why they should give AI exposure to a company that's now valued at 40 billion bucks. And that is the thesis right there. They are solving problems for industries. And if every industry is going to need some level of artificial intelligence, and I hate even saying the word because it sounds so buzzy, but you're going to need that type of technology to transform the industry, to solve the big data problems that are climate change, that are healthcare. Who else do you call other than Palantir? And so the interesting thing that Dan said is that he's talking to CIOs, and these CIOs are saying, we don't have a reference point outside of Palantir to be able to have this discussion, which is incredibly interesting because what did Karp say 2 months ago? We are getting a shit ton of calls from people inquiring inbound. Now, to be honest, I thought Karp was being a little bit hyperbolic here. I didn't know if he was exactly saying, the God's honest truth about that, but it matches up with what Dan is saying, which is why Q2 might blow our socks out of the water. I don't know if that analogy made sense, but you get my point. If Karp is saying we're getting a shit ton of demand and they can close those deals, even if they don't recognize the revenue, but they get the customer count to close those deals. And Dan has the same exact thesis, which is that every person he talks to in a senior executive role is saying there is no one other than Palantir, which, by the way, a lot of institutions have said this. I talked to a guy who manages a couple $100 million in New Jersey. They invited me to their offices, and I've told the story many times, but he got invited to FoundryCon in October, and he had a workshop with the Tampa Bay General Hospital people, and he said, hey, why did you pick Palantir? Like, why didn't you go with the alternative? And the executive at the Tampa Bay General Hospital that Palantir did like a 2-year R&D consultation with, he said straight up to the guy, there was no alternative. What are you talking about? He's like, it was Palantir or bust for us. We had no other option. And so you keep getting these stories where Palantir seems to be the monopoly in this space, in the context of actually building an ontology and then building the AI platforms that make sense of that ontology to drive business intelligence, that Dan may have come to the conclusion, the simple conclusion, Sachin, thank you for being in the chat, that, look, at the end of the day, it seems pretty obvious right now that Palantir is the pure AI play that's left in the market. And this transitions us into the next discussion about the timing of that report, which is what I want to talk about. Before I get into that, let me get into some of the comments. Christian Soto, thank you for joining. The channel membership means a lot. Thank you for becoming a channel member. John Sarge says, undervalued AI like Palantir was the thing he needed and finally did a deep dive to understand this is a part of the narrative shift around Palantir. I agree. The key words you say right there are narrative shift. Dan has 80,000 Twitter followers. I think the tweet when he said Palantir is to $25 got like 400,000 views. I mean, like, he's got a lot of influence. Like, at the end of the day, he is one of those guys that really does have the mind of retail. And, he gets CNBC, broadcast distribution, all that stuff. That doesn't mean he can't be wrong. And whether you like him or not is irrelevant. I don't have an opinion on him. I have a opinion on why this report came out and what it means for the company I'm invested in. And as a result of that, he has single-handedly shifted a bit of the narrative on Palantir, whether you like it or not. And I believe that is affecting the stock price right now more than the macro is affecting the stock price. We're going to talk about Palantir undervaluation, overvaluation in a couple of bits. We're going to do a couple more segments, and then we're going to get that there. Dan Ives report is a momentum catalyst. Timing is just taking advantage of earnings timing. I don't think he has insight beyond that. Okay, we'll talk about timing in a second. Some of these other comments right here. What do we got? Daily shareholder meeting club. Yes, daily shareholder meeting. And again, we're going to be here at 9 p.m. every single day. Okay, I thought we had more questions. No. Oh, well, this last comment. Remember all those saying overvalued when it was 12 in early June and saying wait to buy under 10? I am so embarrassed for them. I'm going to address this comment when we get to the overvalued, undervalued discussion as well, because that's a big discussion. I actually had a call with an investment banker today that gave me a little bit more analysis into that. And this comment by Sachin is the perfect transition. So Sachin says, don't get bought into euphoria. Palantir still needs to show revenue growth. And that is the perfect transition into the next topic, which is the timing of the Dan Ives report. Now, why is this the perfect transition? Because Q2 numbers this is one of the most important earnings for this company ever. Long-term, probably not, but short-term, definitely. And I think this earnings is going to be one of those pivotal moments where we're going to see if the company can live up to the hype. This is the first quarter in a lot of quarters where there's actually hype around Palantir. For the past year, there's not really been that much hype. I mean, like 2022, we were all like watching all these, we just kept going down and down and down. There was no hype. Every quarter you expect. I mean, August 2022, Karp saying, oh, we're not going to be profitable till 2025. My jaw dropped to the floor when he said that. I'm listening to this earnings call like, fuck, the YouTube video tomorrow is not going to be a fun video. It's like, really? You're going to be profitable 5 years after you go public? Are you kidding me? We've gone from that to where we are right now. And so the hype is big. And so Sachin's comment about Q2 numbers and revenue growth is really important to me, because if we don't show the revenue growth, I don't think we can justify this valuation. So this brings up the question of Dan. Why did Dan put out this report a week before earnings? Now, look, I've had a lot of time to sit on this. Me, Matt, and Steve, we got into a discussion on this on Palantir Weekly, and some of you guys might have heard this clip. This clip, for some reason, did really well. I got like 7,000-8,000 views. I didn't expect this clip to be the clip that people really resonate with. Jeremy also helped by reacting to the clip, so shout out to Jeremy reacting to it. But I think it was an interesting discussion, and honestly, it was a thought I came up with when I was going to ShopRite to buy some dishwash for my mom. Like I was driving there, and I was driving there. It was like 5 minutes from my house, and I was like, ShopRite is like the New Jersey Walmart or whatever. I was just like, why did Dan put out the report today? Like it was Friday, right? It was Friday. I'm in the car, I'm driving, and I'm just thinking about Palantir, and I'm just like, wait a second. Why today? Earnings is next week. And it got me down this rabbit hole. And then when I went on the weekly, I actually brought up the topic, which is it's oddly peculiar. It's very weird that an analyst is going to put out a 1-year price target for Palantir at $25 the week before earnings. Why is it weird? Because you don't have to put it out the week before earnings. By the way, I'm looking up the Twitter chat. Gunjani from the Wall Street Journal. Thank you for joining. I've got to get you on my morning stream. Please, I've DM'd you. Please DM back. We have about 700 people every morning. I know you're a big shot and you go on CNBC, but please come to my morning stream as well. We have a passionate stock audience, and we would love to hear your thoughts on the macro, because your thoughts are awesome. So please respond to that DM, and hopefully we can get you on my morning live stream every single day at 9:20 a.m. Thank you for being in the chat as well. That's awesome. Okay, so why did Dan Ives put out this report? In my opinion, if he's putting out this report a week before earnings, he has some level of analysis, some level of security that Palantir is not going to tank earnings. And it's very interesting to understand how he's conceptualizing this, because it's like, okay, all of us as Palantir bulls, in this Palantir community, we are a little bit skeptical about Q2. Why are we skeptical about Q2? Well, Q2, SaaS companies typically don't do that well. Q3, Q4 is when you recognize the revenue, when you close the deals. Q2, usually you struggle because a lot of managers of executives at companies, chief data officers, they don't want to close in Q2. They might want to test your product in Q2, might want to get a little bit of it in your, in their system, but they're not actually going to commit to a contract. So Q2 tends to do bad for SaaS companies if you look at it historically. Dan Ives is not the guy on Wall. There is no one on Wall Street rushing to be the messiah that called Palantir first. Kathy Wood did it with Tesla. Ross Gerber did it with Tesla. There is no one, to the extent of my understanding, that is trying to be the Wall Street person that's like getting their reputation off calling Palantir correctly. So it is very minimal reward massive risk for him to put out a price target of $62.5 billion of market valuation on a rather speculative company like Palantir a week before their earnings, because what if their earnings tank? If their earnings tank, let's say the stock gets to, I don't know what, it's at 20 right now. Let's say the stock goes to 13, 12. Let's say revenue's just not that good. EPS is not that good. Customer count is It's just, and but $40 billion valuation, the high frequency trading algorithms are like, we can't pay $40 billion for their stock given this growth. No way. It's already growing under 20% year over year. So a company at 40 billion bucks trading at 18 times price of sales, it's a very risky investment right now if you're thinking about the short term. But Dan seems to not care. Dan's like, nope, this is the next Messi of AI, and I'm going to claim it's the Messi of AI. I'm going to put my foot in the ground, and I'm going to say Messi of AI live to millions of people on national television a week before earnings. To me, what that signals, and maybe it's naive right now, maybe it's my 25-year-old brain not being able to conceptualize it as well as I should be able to conceptualize it, but to me, that means that he has some level of sophisticated analysis, whether it's from his team or the due diligence that he has come to the conclusion to, which is that earnings are going to be good on Q2. And you take that with a grain of salt. That is my elementary analysis trying to weigh the risk rewards, because the simple cost benefit analysis I've done is, well, if earnings suck and it goes to 11, he can give a price target of 20 after earnings if he's still that bullish on the company, right? Because the long-term thesis doesn't change even if they have one bad quarter. Especially if the customer count growth is there and the revenue acceleration just isn't there yet. And he can still look like the genius that called Palantir before anyone on Wall Street got Palantir. It doesn't have to be right now. And I think Dan's a smart guy. Dan's got NVIDIA correct. Dan's got Google's correct. Dan got Tesla, right? Like Dan's given his institutional clients a lot of return this year just in terms of his equity research. He does not have to risk his reputation on Palantir at below 25 bucks. So, that's the conclusion I've come to is that, look, he's done a lot of research and he thinks Palantir is going to 25. Now, what is the counter argument to that? The counter argument I've heard from a lot of people is like, well, he's an analyst. These analysts put out price targets all the time. They're always 1 year out. And if Palantir tanks the bed next week, he's just going to be like, you know what? It's a greater buy at 11 bucks than it is at 15 bucks when I initiated the price target. And I hear that. I think that makes sense. I get it. If the stock goes down and the thesis doesn't change, then he can come on CNBC and be like, look, it's a better buy right now. And then if you buy at 11, you get a better return than if you bought at 25. However, I don't think he wants to risk his reputation on that. I don't think he wants to see the stock go down to 11 bucks, 10 bucks, 12 bucks and be like, oh, yeah, now it's a good buy. It's like, that just doesn't make sense to me. Every time I try to, slice my head around it, it doesn't make sense. It's like, you don't have to take this risk, Dan. There's no rush to be the guy who's calling Palantir. And so as a result of that, this idea that if the stock tanks, he'll just be able to say, oh, double down. To me, yeah, you do that when there's actual turmoil that's irrelevant to the company, like the Twitter stuff or the Tesla stuff. I don't know exactly what Dan said about Tesla, but I'm assuming he said Tesla is a good buy at 100 bucks, 150, whatever. And that's when you double down on a thesis, even if the company is not performing correctly, because long-term, you understand. Same thing he's done with Apple. You don't need to do that with Palantir. You've barely talked about Palantir ever publicly, so you don't need to put yourself in that position. But nonetheless, he has put himself in that position. So those are just my elementary thoughts on how I conceptualize Dan Ives and this report. It doesn't make sense to me in terms of him putting it out a week before earnings, but if he did put it out a week before earnings, maybe he believes that it's going to be good. And we will see. Matt says, Amit is convinced it is coincidental. I'm not convinced it is coincidental. I'm convinced it is oddly peculiar, which is the terminology I've been using to justify this. Sachin says, trust yourself, not Dan Ives. Yeah, and that's why I don't plan to sell Palantir anytime soon, whether it goes up or down. In fact, if it goes down, I'll be very happy to have a nice dip buying opportunity because, my average is still 15. But just analyzing it from an objective perspective, it doesn't make sense for that report to come out right now. So we'll see. Either this is stupid analysis, it's naive analysis, it doesn't make any sense, or maybe the quarter is better than we think it is. And because the quarter is better than we think it is, there's going to be some results that happen in the world on Palantir. Sachin says, I'll be going hedged into earnings, won't mind spending $1 or $1.05 per share at these levels. Sachin did say publicly on Twitter, he's buying $17.50 puts, which makes sense. I think that's very reasonable to be hedged going into earnings, especially given where the valuation is at right now. Go look at Palantir every Q2. They don't do bad, but they don't do great. I agree. They don't do bad, but they don't do great. And that's exactly what happened in August 2022. That's when CARP dropped the line, hey, we're not going to be profitable to 2025. It happened in Q2 last year. So Q2 historically isn't good, and maybe this time we will see something a little bit different. That gets us into the next topic. Is Palantir overvalued or not? Is Palantir overvalued or not? And after that, I'll open up the chat and we'll see if we can have some people join either on Twitter or on YouTube to give some of their thoughts. Okay, so I'm sitting at home today doing some work, and I get a phone call. I get a phone call by a guy named Sebastian. Now, for those that don't know, Sebastian is a guy I really, really respect. Okay, Sebastian is an investment banker. He's 25 years old, and some of you guys might have seen the interview I did with him a long time ago. This was back in January 2022. If you haven't watched it yet, I'm putting in the chat right now. I highly recommend to go watch it because it's one of the best DCF models, evaluative analyses just on the numbers that we've done on Palantir like ever. It's an hour and 17 minutes of pure numbers. So if you're like, oh, Amit only talks about philosophy on Palantir, this is the video where it is hardcore numbers. And we come to the conclusion that for them to be a $250 billion company or close to that, they would need to be growing at like 30% year over year, 36% adjusted operating margins. Dilution would only have to be about 3% year over year. So we go through the bear, base, and bull case. And it's not easy to get some of these valuations. I mean, let's just make it very clear. When you got a company with 2.2 billion shares outstanding and diluting about 2 to 3% every single year, it is not easy if you're looking at pure numbers to get to Palantir even at $80. It's just not easy. And again, watch that video. The whole thing kind of explains why it's not that easy, but we go through all the estimations. So he calls me up. He hasn't called me in like a couple months. Last time we talked, I think was like March or something, right? He calls me up. I'm like, yo, what's up? He's like, so Palantir. I'm like, what about it? He's like, can you justify this valuation? Because, to me, I'm kind of his default Palantir guy, even though he knows the numbers. He knows that I know a little bit more about the insides of, just what's going on with the press releases and all that stuff. And I'm like, can you justify the numbers? And we're both kind of playing this game back and forth. It's like when you like, do you like me? No, do you like me? It's like, or hang up. No, you hang up. No, you hang up. I actually used to do that a couple of years ago. It was a very fun time when I had a girlfriend. So eventually I'm just like, bro, I can't justify the valuation. And he's like, thank God, because I thought I was the only one on the planet that couldn't justify the valuation. I'm so happy to hear someone like you that makes Palantir content every day say that he can't justify the valuation, which is my answer to the question about it being overvalued or not. I cannot for the life of me justify the valuation. I cannot justify Spider-Man meme pointing at each other. That's exactly what it was. I cannot justify $40 billion for $21 million of profits, 19 times price to sales, and 18% revenue growth. I can't do it. I can't justify that. And this is actually a gift and a curse. It was a curse at $7-8 because I was using some of these same evaluative metrics and I was more skeptical of the stock, even though I was bullish for the company. Now, granted, I didn't think the stock would run up 200% in a year. Whatever, it happens. You can't go back in time. But now I think I'm a little bit more smarter in terms of valuations and just understanding how numbers work. And I mean, when I was buying Palantir in 2021, I didn't even know what market caps were. So things have fundamentally changed. And I don't know how you get to $40 billion, even if you give them better numbers than they have right now to justify the valuation. And so I'm going to break this down. The big thing for why Q2 is so important is because either they show the revenue growth, they raise guidance, they raise adjusted EBITDA, they show customer count accelerating because right now customer count is actually going down in terms of the rate of growth. They show government growth is steadier than what we thought it was. They hit on all cylinders, not to even go up from $20, which I think the stock will go past $20 if this happens because that's just how the market's going to act, but to justify the current valuation. The current valuation at 40 billion. It is really, really difficult with the current numbers on Q1. Look, at $12, $14, $13, no problem. I mean, Q1, yeah, it's a little overvalued, but like, okay, every tech stock gets a little overvalued. That's fine. Now we're heading into the 40, 45, 50 billion. You're going to pay half $100 billion for a share of Palantir. You better be really confident that they have the metrics to justify that. On top of that, and again, here's the bear case, management has not bought shares at all. And this is, something Chris talks about a lot, which it's really sad. At $6, $7, no one bought shares. Now, granted, Karp and Teal, they own a shit ton of shares, a shit ton of options. So take it with a grain of salt, right? But it's one of those things where it's like, look, if the stock's that down bad in the gutter, you don't even want to buy a little, right? In fact, they're selling at $7, $8, $6. And so everyone sells for personal reasons. I'm not here to judge or any of that. But the point is, we're definitely not getting any buy-ins from management now. There's going to be no insider buying at $16, $20. I mean, I think management even knows that the company is a little bit overvalued right now. They're not going to be buying that in. What changes everything, what changes the narrative is if Q2 creates enough growth and Q3 and Q4 is able to build on the momentum of that growth. Now, don't mistake this for being bearish on the company, because I have a target of 2030, right? That, like, I think it can reach Oracle levels, $300 billion market caps by then. The problem is you can't get from A to B or A to C unless you go through B, right? You got to get through the stepping point. And so when me and the investment banker were talking on the phone today, we're having a discussion of like, okay, so they really got to get to this 30% CAGR. They really got to get to some years 35% CAGR, given, remember, we have dilution every year, conservatively 3% dilution per year, which means lucky if we have only 3 billion shares outstanding by 2030. And so it's just not that easy to get to these numbers unless there is massive growth. And to be honest, SoFi this morning proved what massive growth looks like. SoFi proved what real investing in a growth company looks like, because they raised their adjusted EBITDA by 70 million. They have member growth of over 100,000 new members. Like, this is why the market rewarded them. Granted, they're a much more smaller company, but nonetheless, the market was able to give them a little bit higher of a valuation because they were able to show growth. I believe that quarter will happen for Palantir. I don't know if it's this year. I don't know if it's next year. I don't know if it's in Q3. I don't know if it's Q4. But it would be weird of me to do all this analysis on Palantir's TAM, their market opportunity, their partnerships, their government business, the NATO aspect of everything, Russia, Ukraine, everything going on, and be like, oh, they're only going to grow at 18% year over year for the next 5 years. It literally it wouldn't add up. I can't be like, oh, all of these partnerships are so bullish. They're getting $110 million from the Space Systems Command in 3 weeks. They're racking up deals left and right, but they're only going to grow sub 20% year over year. I don't think that happens. And so what I am betting on to justify the current valuation and future valuations is the same thing any investor should be betting on right now, which is continued growth. And the paradox of being a Palantir investor is they have the greatest product in the world. We know they have the tech that no one else has, but the selling of that tech has been a little bit subpar over the past year. Now, 2021, remember, revenue growth was 41%. 2022 is when it declined to 24, and now we're aiming for 18. And this goes back to something that Karp said a long time ago, which is the government business CAGR'd at 30% year over year growth, but some years it was 0, some years it was 60. And he was telling an analyst on one of the earnings call a couple quarters ago, look, the business can go up or down, but at the end, it will CAGR at the results we're saying it will CAGR. Now, Palantir took out that 30% CAGR growth from all the pitch decks. However, in a meeting or in an interview a couple of, I think, months ago, Karp was quoted as saying, I am still on track to guide the company to 4.5 billion in revenue by 2025, which is a 30% CAGR. And so right now I'm kind of trusting Karp and trusting management that they did this before in terms of the government sector to be able to get 30% year over year growth and actually CAGR that over time, even though some years were up and down. I think they should probably be able to do that again in the public markets. And to be able to justify this 30% or maybe 35% year over year growth, if anything, 25, 27% year over year growth. Snowflake is massively overvalued. The problem is Snowflake is growing 70% year over year. Do I agree with the valuation? No, but the growth rate is one of those things you can't deny. The problem is they have all these other external issues in terms of stock-based comp and all this stuff. And they don't really have a product that I believe has a fundamental moat, but they are showing the numbers in terms of growth. So at the end of the day, if Palantir can show the growth, which I believe they can show the growth, healthcare, energy, NATO, every single manufacturing company in the world needing a ontology for their supply chains. I mean, the list goes on and on and on. It's why I've been able to make thousands of videos about this company, because there's so much to dissect and analyze, which is why I am continued to be invested in the stock. But I can objectively say the growth is not there to be able to justify the current valuation. And that's why if they just do what we are prophesizing they will be able to do, then the growth will be there and the valuation will be more than justified. In fact, it'll be undervalued. But we've got to see if that can happen. We've got to see if that can happen. And if that can happen, that's going to be a really great thing for shareholders. Before I put the StreamYard in the chat, actually, let me put the StreamYard in the chat. If anyone wants to join, just give a couple of their thoughts. You are free to join. I want to do the counter to what I just said. So what's the counter for why they're undervalued right now? Why is Palantir undervalued right now? I don't think the numbers can necessarily justify an undervaluation. What I think justifies an undervaluation that I think a lot of people aren't thinking about, by the way, I think I have a couple arguments for this. The first one is NVIDIA. If NVIDIA crushes earnings, which they said they're going to crush last quarter, the market has upgraded them from 400 to 550, 575 in the price targets that I've seen at pretty much every major investment bank. I think they're going to crush earnings. There is zero reason for NVIDIA to not crush earnings after telling us they were going to crush earnings and they have a monopoly in AI compute. If NVIDIA crushes earnings, Palantir is going to go up as a result of that. So is C3, so is Microsoft, so is all these guys. I mean, remember, Palantir went from like 9 to 13, from 13 to like 15, and then it briefly came back down the day NVIDIA went up, because NVIDIA's earnings sent a shockwave to the market. And so what's going to be very interesting about NVIDIA earnings is that the Magnificent Seven have already been magnificent. We got Amazon coming up a little bit later, and Apple. I think Apple will be okay. We'll see what happens with Amazon. If NVIDIA rounds out a phenomenal big tech earnings, Magnificent Seven earnings to end Q2, the byproduct of that will be a crap ton of investors saying, we cannot buy NVIDIA at $500. We just don't want to pay $500 a share for NVIDIA. Where else can we get the AI exposure? And they will be further, again, looking for other stocks that have AI exposure that's not NVIDIA. So that's one reason for why, even if the growth is not amazing in Q2, they still might be undervalued at $20, because NVIDIA's valuation may be able to justify that for Palantir. Now, would I use that as a reason to buy the stock at 20? No. In fact, if you put a gun to my head, say, would you buy the stock at $20 right now? I would say no. Just objectively, no. Not now. I mean, look, it's a stock that's run up 200% over the year. You don't really buy those stocks. You sit back and you relax as a long-term shareholder because you've made some money and you just watch your holdings go up. But for trying to chase the price, I don't think this is the right price. So I wouldn't use this as justification, but NVIDIA could be a catalyst. Another catalyst could be momentum going into earnings to be able to actually live up to a little bit more of the hype that they've been able to create. What I mean by that is today they had a partnership. I'm not going to go through it today. I'll go through it over tomorrow. They're a couple of partnerships away, a couple of deals away for the market to really look at them in a different way. And I don't know if that's coming now. I don't know if that's coming next quarter. I don't know what that's going to be. But, Snowflake partners with NVIDIA, the stock's up 10%, even though we know that's like hocus pocus. Like that it's nothing. Palantir actually creates a partnership or actually does something really substantial in the AI space that's even different than AIP. You've got some real momentum going behind it. And the byproduct of this point is that because we're having a second AIP conference, the AIP conference is going to be in September? That AIP conference might have led to massive customer count. If that AIP conference is actually leading to more people coming into the company or starting to leverage AIP, and that's the whole reason they're throwing a second conference, that's in September. That conference is after Q2. It's 1 month after August. Potentially, Palantir is looking at themselves like, hey, we closed, I'm going to put a random number out here, 30 new AIP clients, which the market would go insane if they closed 30 specific AIP clients. That's not total clients. That'd just be AIP. Let's throw a conference. And so you don't have to put 2 and 2 together to be like, well, if there's 30 new clients and all of them are getting value from AIP, maybe they're all not paying for it yet, but they're all getting a shit ton of value from it. Let's have a conference and keep marketing, because we've got a crap ton of new people to be able to market in the conference, a crap ton of new companies that are not just Cleveland Clinic and JD Power, et cetera, that are able to explain why AIP is good. That is another catalyst in the next week or two for why the stock might actually be undervalued, even if the numbers don't justify it, because they have significant growth coming from AIP, matching what Karp said about massive demand, and because NVIDIA earnings might be a byproduct on NVIDIA or on Palantir. And so, I mean, those are the undervalued argument cases for why Palantir potentially is undervalued. But objectively speaking, I don't think the numbers are there to justify the current valuation. And as a result of that, Q2 is going to be really important to see where it goes from there. All right, we've got someone in the back. Adam Bergman, Mr. Adam. What's up?
What's up, my man? I'm so glad to be here. Shout out to the entire Palantir community and shout out to the entire SoFi community as well. Shout out. Really good.
Let me know on Twitter if you guys can hear him well. If not, I'll put the mic a little bit closer. Adam was actually supposed to be on the stream with me, but I got caught up talking for 30 minutes about overvaluation, undervaluation. He's got a lot of juicy stuff to share with us as well. But before we get into it, Adam, what are your thoughts on Palantir hitting 20? How do you think about the valuation right now? What are kind of your core points?
So I think that they have a really big...
Bring up the mic a little bit more, Adam. A little bit more. You're a little low.
Is this better?
Yeah, bring it a little closer to you. Yeah, bring it a little closer.
Is this okay?
Better? A little louder. Can you turn it up a little bit more?
Second.
Yeah, even the chat is saying you got to turn it up a little bit. While you're doing that, Matt says, I see deeper partnerships with companies like Lockheed, Sikorsky, or other military companies to build their user interfaces into the products. That is true. And those haven't even been priced in yet. Sachin says he can jump on 10 minutes. All right, Sachin, I'll share it with you. And you can jump on with us.
Is this better?
This is perfect. Go ahead.
Um, Listen, they have really big shoes to fill, and it's their job to get in there. We don't know what they're hiding. I'm looking very forward to seeing their net retention for clients because I feel that if they really are stacking Foundry with AIP, the net retention is going to go up. I believe the average for 22 was 115%, and the average for 21 was 131%. So if we can get that up any amount, that's showing that they're increasing their clients. But I'm looking for a really big nudge. And the AIP numbers are going to come in for, quarter three, quarter four. Hopefully, we're going to make some money on that. If they can do that and give forward moving guidance, we should be okay. But it's not easy. I mean, but even if we drop 20%, we still are up like crazy. Like, people are going to cry and complain.
That's the crazy thing. If Palantir gets to $18 now, we're like, oh, it's a red day. Like it's 18, right?
Yeah, 100%. So listen, it's getting really interesting. But again, you don't know what's behind closed doors. You don't know what they're doing. Look, I'm going to talk about in a moment what I found. And this is absolutely freaking bonkers. And once I'm reading this, I am more bullish about Palantir than ever. Because if you read this report, which we're going to go over, and this is an official DoD report, bro, there's that the Army at the highest levels were trying to cancel Palantir. I'm going to go over it. Just let me know when you're ready. And the only reason they got it is because soldiers were like, Palantir saves lives. Why are you not using them? Bro, let me just get right into it. This is so crazy. So, like, I'm not even like lying. This is not conspiracy theories. This is official. So the Army had a system called DCGS, and that stands for a Distributed Common Ground System, okay? They spent $3 billion, 10 years to make this system. They wanted to update that system. When they wanted to update that system, they already spent $2.7 billion to update the system. This is happening like in 2012, they started to update the system. Okay. They said that they were going to update the system. Palantir says, listen, why are we not being used? There's a law called FASA. It's called the Federal Acquisition Streamlining Act. And then there's another acronym stands for COTS, C-O-T-S, which is excluding commercial off-the-shelf solutions. And in general, what this says is if the Army has something that's commercial that can do the equivalent or better, or at the same price or better, they must consider the company. Palantir sues them. There's a report that came out that I'm looking at. Right now, it's unclassified. At the time it was classified. This report stands for ATEC. It's the Army Test and Evaluation Command. This report was written in April 2012. A general wrote an email. It came out later. They said, delete this report and don't show this report to anybody. Redo the report. They made a new report in May, a month later. The May report said Palantir sucks. Basically, it was a very negative report.
Because they had to justify it. Yeah, they had to justify it.
But then this report that was done a month earlier comes out after the lawsuit in 2016. And the people that were supporting Palantir was a high-level CIA. I don't know if he was a director, but he was super high-level, and also one of the other three-letter agencies, also supporting Palantir. Also, Palantir was in charge of finding IEDs in Afghanistan, and military men were like, hold on a second. We have a system that works better than what we have right here. Why are we not using Palantir? So these are people that actually use Palantir. They're like, Palantir saves lives.
By the way, IED, for those that don't know, is improved explosive devices. Go ahead.
Bro, so then Palantir sues. The judge is like, hold on a second. How much is the system going to cost? They said $11 billion, 30 years to build the system. That's what the Army says. Palantir says it's going to cost millions, not billions. And that's when they got that huge contract for $860 million, $838 million. Remember from the Army, nearly $1 billion contract they got?
Yes.
Like back in
7 years ago.
That's the contract. Since then, the report came out, which I'm going to read to you tomorrow morning. This is not my words. This is the military words. I can give you a couple of comments from this. But the comments that they had, the criticisms, which was constructive criticism, is exactly what led to Palantir Meta Constellation and Palantir Edge. They created that because of the criticisms here. Now, the report that I'm going to read you tomorrow, Palantir took on not one software, but they took on like a suite of 4 or 5 different softwares put together, which made up this program. And Palantir whooped their ass. Yo, the main, and I don't want to get in too much into it, but I could just read you. So everything I'm saying is not conspiracy theory. Amit, this is insane.
Oh, that's good. We can save it for the market open. It'll be really good for a lot of people to hear from it.
Yo, they had a 97%, guys, 97% approval rating from the people that were testing Palantir. 97%. Also, in many instances, the people that got training for several hours. And they said several hours of training was better than months of training using a different system. That's how easy it is to use Palantir. This is not my words. Again, quoted from the military men and women with their like IDs for the military, their height, their weight, the male, female, like, bro, 100% legit. It's absolutely freaking crazy. One of the main, yeah, go ahead.
I was gonna say, so the basics of what you're saying is the military was using Palantir. It was effective. They stopped using them. A general said it was effective. That report or that email got classified. They put out another report saying it's not effective. Palantir sues them. They have to put out the original email showing that it is effective. Then you get support from generals and the CIA saying, actually, no, it actually helped us find these improvised explosive devices. And then Palantir wins this $800 million contract because they actually showcase the utility of their software.
Yes, but to make it very clear, Palantir did not sue to say they have to get the contract. Palantir sued to say that the U.S. Army is going against the law because they're not allowing outside commercial off the shelf. It's called off the shelf, commercial off the shelf.
They're not having a meritocratic process to procure software, essentially.
Correct. And the quotation from May, the new report was, Palantir is not up to task. That was the quotation from one of the high level ranking people. It was like a cover up so Palantir doesn't get in there. Because remember what Palantir said, it is nearly impossible to work with the military if you're not one of the primes. This is the only reason why Palantir is there. It's absolutely absurd, man. 96% of the people surveyed said that Palantir was effective in supporting their mission. 90 out of the 100 people, 90% said that Palantir saved them times. The average of saving time was like 30 to 50%. And they were like, some people were like, Palantir saves us hours a day. One guy said Palantir saves me 1,008 hours for the year. He like broke it down per day, per minute, per hour. And it's absolutely freaking insane. And
that's real. And that's what we got to see actually in government growth, right? Like the shit like this is real. The product is real. And so Q2 numbers got to show that government growth or even beyond to justify the valuation.
Absolutely. But that's why, is Matt here yet? He's here?
No, we got Sachin. I'm going to add him in. You can finish your last thing and then I'm going to add Sachin here. All three of us.
I just want to say that Palantir is listening to criticism because that's how they become really good. But what I wanted to say is something that me and you were saying for the longest time, Amit. On-the-job training, research and development for free. Palantir was built by funding from In-Q-Tel, which is the venture capitalist arm of the official, unofficial 3-letter agencies. Right now, what's happening in Ukraine, mark my words, and we've been saying this before, on-the-job training. They are literally doing research and development for their software to be used in the future. Every single war Palantir is part of, like it, hate it, I'm just being honest, guys. And they're getting free research and development. And that's why Snowflake, Datadog, C3AI, Databricks, all these companies cannot, I mean, they physically cannot catch up to Palantir. That's why they're always 5 years ahead. That's what CARP means.
Yeah. No, it's real. It's a really, really good price. And Adam did a video on this. So you can check it on his channel. And tomorrow in the market open, he'll be talking a lot more about this. But it's really, really good. Due diligence diving deep. Sachin, you're on. Thank you for joining us. How are you feeling, Palantir at $20?
Pretty much the same, man.
I mean, you're in the green now, right? You're not red anymore on Palantir.
Yeah. Seemed for me like I didn't feel bummed up when I was when it was 7, and I'm not too over enthusiastic now if it is reaching 20. See, nothing has changed, to be honest. In last 2 2 or 3 quarters. I think they introduced AIP, but at the end of the day, these things existed in some form anyway. I think what people have to realize that this company still is an enterprise sales. Now, enterprise sales, when we talk about, it's a bit different compared to what we know about Snowflake or Datadog. Okay, because it gives you like end-to-end system, which requires that you need to do a lot of top-down selling. Okay, because they sell in terms of a lot of large contracts. Okay, and that is where the challenge always comes, is that how effectively they can do a lot of top-down selling in short term. Okay, so when we are looking like revenue numbers from quarter to quarter, as we have seen in past, they always sandbag and they always deliver a beat on revenue. The question is always is how much, and I expect that.
I was about to say, what do you expect from Q2? Do you think we beat massively, or do you think we beat slightly, or we miss?
I think we'll beat better than what we have done in past, but I do not expect beat like Nvidia or something like that. Okay, and there is a reason for that, is that see, they are already having a lot of existing clients. Okay, and it's easier to go and implement LLM and AIP in those existing clients. So there is going to be some additional revenues coming from that, but my focus will be like, are they going to improve the guidance or not? Okay,
right.
And see, at the end of the day, 20% year-on-year growth will find many people questioning the valuation and the multiples at this particular time. And to be honest, they're fair. The interest rate is still 5.25, 5.5, and interest rate is going to increase at least 1 or 2 times more. And we are not there where it starts to going cut. It is also clear. I think the seminal point in the whole year was the Nvidia last quarter earning, because that has literally shifted the base for the AI stocks.
Yeah.
Okay, and since then, a lot of AI stocks are riding that wave. The challenge is that how many of those stocks can actually deliver in these earnings. Okay, and what is happening is that some of these stocks will deliver somewhat beat on the estimates, and it will leave market confused for a while, that okay, is it good, is it bad? Okay, but whatever happens in 3 weeks, 4 weeks, market gets some idea, okay, what's the actual valuation should be at these levels. We saw what happened with SoFi yesterday. It was 10.44, then it fell twice to 9.28, and then it went to 11.7. So in no way is market are efficient. In no way is market are well informed at these times. I'll be honest. There is a lot of emotions. I know many of my friends who have been sitting on sidelines with cash for last few months, waiting for the crash. Yep. Okay, so there is a bit of FOMO. I mean, we know that between Friday last week till today, the only thing that has changed in Palantir is that there is a target by Dan Ives. There is nothing else happened, to be honest.
So you would say the stock is overvalued right now, objectively?
Objectively, stock is overvalued. Okay, the way it was, the market was valuing it. I mean, to me, the 20 is a fair price. But the way it has reached,
20 is not overvalued to you. 20 is fair.
See, because at the end of the day, when you say valuation of a company, you always look the valuation of a company looking forward, that how it is expected to grow, what its competitive advantage and moat looking in any of the emerging trend. And as we discussed, like AIP is a kind of only play in town as of today. Okay, so looking forward basis, if you ask me, I've said it before also. To me, $20 is a fair price. Okay, anything above 20, I'll be a bit shaky. Okay, the company is already have touched. I mean, it's already have touched valuation around 42, 43 billion market cap, and if you look in terms of Snowflake, I mean, that has a price to sales multiples still of like 28, 29, but despite losing the growth, they are still like a 30% plus in terms of growth.
Correct.
So you cannot just apply that kind of 28, 29 multiple straight away to Palantir without questioning the revenue growth.
If someone didn't have Palantir stock and they wanted to buy right now at $20, would you say it's a good buy?
See, if you buy it, see again, like how you build your position is important. Okay, if somebody buys $20 today and immediately sell covered calls over 20, okay, I mean they are still hedging themselves for an immediate drop.
Right. Right.
Okay, I mean, and so somebody can also build the same positions looking back in terms of selling long dated puts also. Okay, so if I'm seeing like the puts on 20 in January 25 is $5.40 of 555. Okay, that is like 25% gain. That means as long as Palantir stays above 20, you immediately collect that kind of money. So 25% for somebody who is investing in money market for a duration of 1 year, 6 months, I think that's a fair return.
Correct.
Okay, and then if it goes back, I mean, you still end up buying Palantir in January 2025 at a price of like 1445. That's a steal.
So ultimately, you believe the growth will be there over the next few quarters, even if it's not necessarily in Q2, to justify the report from Dan Ives. So let me get your thoughts on that, because let me do Adam real quick. Then you, Adam, what was your kind of high level thoughts on the Dan Ives report when it came out, and then we'll do Sachin.
See, sorry, well, Adam, you go first.
Go for it.
Okay. See, it's always good to see that Wall Street analysts are coming and jumping on it. But if you see the whole report, there are only two things I think which are important. I think there is an image where they show what are the different services that AIP offers, which is a material information.
Yep.
Okay. Now, the way I dissect everything is that what is data, what is information, what is opinion. So it's a messy of AI, and all those things are opinion, and people don't have to buy into that. Okay. If you cannot judge the AI excellence of Palantir by yourself, yeah, I think that means you don't know what Palantir does. Okay. The second thing is, which is most important in that report, is that he has shown a DCF model. Now, if you see the DCF model closely, he's not expecting a lot of growth in the current year. Okay, so a lot of growth he is expecting is being embedded for the future purpose. Okay, now think from this point of view, that if Palantir is reaching 25% year-on-year growth, say Q2 2023, then Palantir is undervalued. Okay, if Palantir is not reaching 40% year-on-year growth by the end of by say the middle of Q3 2025, Palantir is overvalued in my opinion. You don't build $1 trillion company if you cannot touch 40% year-on-year growth. I mean, if you are going to stay always below it, like I said, it's always going to be a good investment. It's always going to be a niche investment. But if you want it to be generational investment, at some point of time, you have to deliver those big daddy quarters. We have not seen big daddy quarters. We have seen good quarters. We have seen good reports, but nothing that is, I would call it like outstanding at this point.
Okay, so let me ask you why Dan Ives decided to be Big Daddy on Friday and drop a report right before earnings. He has no obligation to do it before earnings. Is there anything you're thinking, tinfoil hat theory, why is this guy dropping a report right before earnings when it could tank and he could not risk his reputation?
See, I don't think at this point, I think he is reasonably convinced that he is not risking his reputation by putting money on Palantir, and so many big CEOs have come in the support of the product. He also understands the macro of government. Palantir is going to be a major play, and whatever, I mean, if anybody is following all the government activities, the use of AI and the use of SaaS product in government is only going to get increased. And especially a company with IL6 kind of approval, I think there is a fair market which is entirely of their own. Other players, like when you talk about Enduril and Big Bear, they're already in partnership with that. They're already in partnership with a couple of other players. So that's a safe play. Okay, the growth in the US commercial for Palantir has been strong. And the way enterprise sales work is that the US companies first implement something, then they implement the same thing in their subsidiaries across the world, and then across the world, different companies try doing the same. So the growth in a US commercial space is a leading indicator is what is going to happen in enterprise sale across continent.
Right. And that's what Dan was talking about as well with enterprise.
But these are the things we have already discussed. These are the things we already know. Okay. The report doesn't say that Palantir does something, introduce a new use case or anything. No, it's not there. We know
It was a
we
pretty
have
basic report. It wasn't that deep, for sure.
see that kind of report could be summarized in half a page, to be honest.
I agree.
Okay. So now question is why. Now the question, second part is on the timing part. Okay. See, analyst at this point, and you can talk to Sebastian also about it. Everybody is under pressure to deliver or to tell their clients what is the next AWS within the AI space.
Why?
Okay,
Why
so-
do they have this pressure? Why are they so held down for this?
I mean, the pressure comes from everyone, like in terms of, I mean, everybody is pumped up about AI. Okay, everyone is talking about it. You can see that in a lot of earning reports, how many times different CEOs are just saying AI for the sake of AI. Okay. Also, you need to remember that last year, all of the tech sectors were beaten. Everybody wants some respite to grow and to show their shareholders that they can deliver more than what you are expecting from us. And to be honest, like I said, the Nvidia earnings was a seminal moment. So everybody goes back and say, you see what is happening. Nvidia is selling shovels. Okay, so there will be some other things that will go along with it. And by the way, software is one of those. Okay, so I would say that going to 20, making a new high, new 52 weeks high, I think this is all welcome. But just remember that the Palantir was $7.28 before the Q1 2023 earnings.
Correct.
So you has to always think back that how much company has fundamentally changed. One of the fundamental change that we have seen is that the introduction of AIP. They have shared more information on AIP. There were a couple of good interviews that came. There were a couple of good endorsements, especially the Novartis CEO endorsement that left CNBC shocked because they weren't expecting that.
Correct.
Okay, I think the message that is going to the mainstream media at this particular point is, see, they don't want to come out as a buffoon as happened in several other companies, like happened in the
Like
case of
Tesla.
Tesla.
Yeah.
Okay, now see, we have to also be very careful. Also, see what Wall Street tries to sell. The Wall Street tries to sell us very hard, Nicola. Okay, so we have to be very clear on the narrative part here is, at the end of the day, you can get 20, you can get 25, you can get 30. It's all vaporware if you do not deliver on the revenue promise. The good part is company has a lot of cash. Company is debt free. Their product is unmatched. And their sales team has shown potential to sell more and more with time. But their sales team hasn't sorted out the issues that have plagued them for all the time since they have gone public.
Yeah.
So that should be the case.
Adam, what were your thoughts on the timing of Dan? Or go ahead. You're going to say something anyway. Go ahead.
Yeah. So maybe one of the reasons why he initiated it right now is because he kind of messed up with C3 AI, right? He was praising it for the longest time. C3 AI is a dud. It's not really delivering anything. And maybe he really wants to be behind a AI play that's actually going to deliver. As such and said, as we say all the time, they have a lot of government contracts coming out. A lot of people sleep on the government, only talking about commercial, but commercial comes from government in Palantir. And I think that they're going to increase their government contracts, not just within the United States, but especially in NATO-based countries, which is going to lead to more commercial contracts because unlike woke culture in the United States, where Palantir is hated on for some odd reason, Palantir is celebrated as a savior of Ukraine right now, in Ukraine, right? You could see the narrative shifting, and that's going to be in like Baltic states as well. So maybe that's why the timing came, because he wants to support an AI play because he messed up on C3. In terms of the actual report, it's a lot of things that we already knew, but 99% of the people don't know what we know. So it's a fantastic report for the casual person, the civilian, and get them acclimated to what Palantir does. So it's awesome. And again, we finally got eyes and ears because of the DPO. Everybody hates us in Wall Street. Well, now it's kind of the same thing that happened with the army. As much as you hate us, you have to use us because we're so good. Well, as much as you hate us in Wall Street, you must recognize us because we're not just about the talk, we're about the walk.
Yeah, the qualitative analysis of the report I actually thought was really good. I know it was pretty basic, but it shows that he has an understanding of the company. The C3 AI thing, I think the $50 price target honestly was because of the valuation. Because C3, people forget, it's like a $2-3 billion company, so it could very well hit $50 if Nvidia runs and all that stuff. But I agree with you, it's not the thing, and maybe Dan is looking, as every personal Wall Street person is looking, to increase their personal brand by getting a stock right. Kathy did it with Tesla. Ross did it with Tesla. Dan, I mean, Sachin, how about you speak to this? Dan's gotten the most obvious companies right, which is why he hasn't had kind of that. He wasn't early on Tesla, right? And
Dan didn't get SoFi right.
Well, I think a guy at his firm got it wrong, but I don't know if Dan cared about the fintech. But yeah, the firm got it wrong. Do you think there's any world in which he wants that shining gem to define his legacy, like Kathy and Ross have, that he really doesn't have? Because you can't get it off Google or Microsoft.
See, everyone want that kind of glitter or pixie dust, whatever you call it. Okay, everyone wants. He has seen like how much his profile has been helped with Tesla. Now, if AI is the next trend, see, I'm not suspecting his intentions. I think what he's doing is fair and honest, but driven by more of the mania around that time. Okay, see. When you build, so for example, like, I criticize Kathy a lot of time, but when Kathy does something, okay, Kathy comes up with quite a detailed discussion. Sometimes it's baloney, but sometimes it's good also. Okay. Yeah. Now, when I saw the report, Dan I says it's a model, it's an opinion. There is nothing new which I say, oh, I didn't think that way. So to me, I think the way I look at the opinion is to validate is that somebody tries to draw insights and inferences using the same data which I already know, and that got me thinking. So there is nothing like that in that report. We have been in Palantir. So at the end of the day, what matters most for us is that what is our own thesis. My own thesis hasn't changed.
Yeah, well, that's fair. That is very, very fair. And I think it makes a lot of sense in terms of where Dan is coming from, the timing of it, and ultimately what's going to go on. Crossroads says Ives wants clout. He wants to be known as the AI savant, which will set him well up for the next half decade. Yeah, and if he gets it right, he's going to make more money, right? At the end of the day, he's going to have more institutional clients. He's going to get paid more for his research and going to be able to keep delivering more picks. I'm going to open it up to Twitter. If anyone on Twitter has any questions, I have Sachin with me. I have Adam with me. So if you want to request to speak, we have a request on Twitter. Okay, so I'm gonna accept the request. You can speak, and you are broadcasted to 400 people on YouTube, and I think 50 on Twitter. So you can speak. If not, we will move on to someone else. No name, that's you.
Hey, hi, Amit. Thanks for giving me a chance to talk. So really appreciate you. I want to appreciate you a lot. A lot, but I can't do it because I'm talking. But really appreciate you, brother. I've been following you when you were actually doing all these, YouTube videos when it was $7. So I started learning about Palantir from then. Right now I own around like 8,000 stocks. I'm thinking to get into 15,000 range. My average like 12. So
wow, not bad.
It's all you. It's all you. I trust me. It's all you. So I just want to keep up my opinion on Palantir, what I think, and I also want to give some few comments. So the way I look at Palantir is that I know you guys are talking about valuation. I don't look into valuation so much. I don't do it on Excel. I don't do all that stuff. Let me put it this way. Elon's my hero. When I say my hero, people think Elon's the smartest guy, but underneath Elon, he's the best businessman. If you read his book, the way he runs a business, he's the best businessman. And I think Palantir is in the kind of same range as Tesla. So let me put it this way. So Palantir started giving their products to high-end customers, meaning governments, military. They made a point saying that, we are a good product. Now they started doing it for all the, like companies, like low tier companies, just like Tesla. If you see Tesla, it started with Model S, high-end customers. If you think Tesla is overvalued right now, I would say Palantir is overvalued right now. And
Right.
I'm looking at Palantir is that the base case scenario, I think, is, will AI be the future? It's going to be $1 trillion company. At least that's the base case I'm giving it. Can Palantir acquire 20% of the market? Just like Tesla. Can they acquire 20% of the market? If so, what would the value of Palantir be? And I think Palantir is going to be around $200 billion. And the reason, and that's my base case. That's what I think.
Which is pretty reasonable. Most of us think 200 billion is pretty reasonable in 10 years.
Yeah, that's what I think. And the reason I think Dan came up with that report is that, okay, I honestly think these guys usually get some insider information, meaning not like exactly what the numbers are going to be, but at least what the sales are going to be.
I agree.
So I think he came up with some kind of info saying that, the sales are going to be really good. And I think this quarter is going to be a big beat for Palantir. And I think he's going to be right. That's my case on Palantir.
Okay. No, that's fair. That's very fair. First of all, thank you for the kind words. And yeah, I think a lot of people are questioning the timing of this, and maybe I incepted it into everyone's mind to think about the timing, but it makes sense, bro. He didn't have to do this. And so maybe he does have some insider information. I guess we'll see. Only time will tell. But yeah, thank you so much for your thoughts. Really appreciate it as well. If anyone else wants to come up on stage, you can. I'm also going to put the YouTube link there. Sachin, Adam, if you have to leave, totally understand. If not, if you can stay, then we'll have some guests ask some questions. Natalie says, totally agree. Alex is giving Elon leadership vibes. Sachin, can you comment on that? Do you think Alex Karp could be an Elon Musk type of CEO over the next decade?
I think I've covered this topic several times. And see, Alex is a good CEO, but he's not Elon, in my view, I think. See, Elon is, I think.
But who is Elon? Is there anybody?
I'm not even qualified to speak about his excellence, to be honest. But Alex Karp is not Elon. That's my view. Okay, I mean, see, you need to create industries. You need to be the leader. You need to do things which are not expected from anyone to be Elon. Okay, what Alex is doing, I think he's doing very strong, very commendable job. Okay, I think the only place where I kind of match Elon and Alex Karp is that they both are bold enough to speak their mind. Okay, but if you ask me in terms of excellence, execution, Alex has done good job, but yeah, he's not Elon.
Okay, we got someone else in the backstage. Grant, you're on with us live in front of 400 people, and I think 50 on Twitter Spaces. You're up.
Hey, how's it going, everyone? I just want to speak to the community and say, it's really exciting when the stock pumps. Everyone's like super, super excited to make money, but stay safe and make sure your position is reasonable, because when everything's high, everyone starts getting emotional and people get carried away. And it's important that as our community grows and everyone's getting super excited about the stock, that we keep our heads on straight and don't go overboard, which I know the Palantir community is really good at. So it's really good that we sort of do keep our head on straight. And thanks to everyone for putting out good information and making sure that we're all sort of up to date on the latest news and everything.
Wait, Grant, were you caught up in the last bull market with your pants on the ground, and that's why you're kind of cautious a little bit more now?
Well, I got in at 20, but then I just rode it all the way down.
Okay.
And now up pretty big on it. But I mean, that's when it gets exciting, right? You've followed a community.
Are you thinking at all, Grant, of selling, or do you have a 10-year time horizon? What is your
10-year?
Why do you have a 10-year? And do you actually have a 10-year, or are you just saying it to say you
No,
have a 10-year?
literally. Yeah, because I think with something like this, time is going to pass anyway. And if you think Palantir is going to be in the world 10 years from now, it's going to be a hugely established company. The market cap is going to be much, 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 much higher than it currently is. And, you can essentially just buy that asset and just hold on to it forever. And it will always be more valuable than it was, prior.
Yeah. That's fair.
And I think that, taking it from a simple point of view of, that's just going to be market capitalization growth on your asset.
Yeah, that's fair. Thank you for joining, Grant. Really appreciate it.
Can I add
ahead,
one
Adam.
thing, if you don't mind?
Yep, go ahead.
Forget about over, under, or fairly valued. We got 5 major catalysts coming up. One of them is optics. 4 of them are actual catalysts where it could bring in revenue. So we have the NHS contract that leads the way to more national health contracts with other countries because, United Kingdoms is a leader in the world, just like the United States is. We have the Titan contract that hopefully goes our way, which is going to increase more government contracts, maintenance contracts, and you see it. We start small, we keep expanding. You have S&P 500, which is completely optics, but it's going to, increase the share price, but it doesn't actually help the bottom line, right?
People are gonna have to buy shares if we get into the S&P. That is a catalyst. We're 2 quarters away.
But let me rephrase. I mean, that's more of an optics, right? It doesn't actually reflect to anything. You know what I mean? It's optics. It's not actual money or substance. Yeah. But for sure, it's a catalyst, like I mentioned. And then, in my opinion, I believe that this war is going to be over in 2024. In my personal opinion, which I believe is going to be a major catalyst because Ukraine is going to be as big as the UK. If Ukraine has some type of resemblance of a win, loss, whatever you guys want to call it. If they're standing and they're rebuilding, Palantir is going to be there. And a major catalyst that most people are not taking into account. If Trump wins the election, specifically Trump, in these reports that I was talking about earlier, Trump pushed the fuck out of Palantir. He loves Palantir because Palantir saves U.S. military servicemen and women lives. That's why Trump loves Palantir, because it saves.
You actually saw some stuff connecting Trump to Palantir, or you're
not in the official report that I was reading, but the more I'm digging deep, yes, they mentioned Trump's Palantir in a lot of the reports.
Peter
when I say
shaking his hand at the famous picture, we both
for sure. So there, Trump is, that's where he got warp speed from. So Trump recognizes that Palantir is good for the military. It saves lives. Trump loves the military. I don't want to get political here. But yes, they mentioned Trump and Palantir in a lot of words. That's why Palantir is hated on a lot. So all these things are major catalysts for Palantir that can get them to fill the shoes that they're in right now. I just wanted to add that. We do have major catalysts. It's not as good as Bed Bath & Beyond 3 for $10 shampoos, but it is a major catalyst happening.
Bed Bath & Beyond 3 shampoo. I paid $14.99 for a bottle of shampoo. Yeah, 3 for $10 is pretty good.
I hate you, Amit, and your good hair. I hate you.
We got someone backstage. This is a guy I really respect, fan of the pod, Crossroads. Thank you for being here.
Hey, guys. Thanks for having me on. I wanted to ask a question. I don't think it's going to happen, but I think that, well, just preface it. I think the hardest thing for a lot of us is how to handle not when the stock goes down. You just dollar cost average if you have high conviction and you just keep adding like we've done. But what if, and Palantir's run up a lot, but what if this year we see new all-time highs in Palantir and we're not seeing anything like Q2 earnings, good, Q3 earnings, they're good as well, but nothing that's just blowing us out of the water. How do you handle that? Like, what is that going to change anything that you do with your portfolio as far as like selling out covered calls? Are you going to take a position off the table? New all-time high this year. What do you do if earnings are just kind of decent?
So Sachin, I think this is a good question for you. Let's say Palantir hits 35.40. What are you thinking? Or even 30? How would you play it?
I mean, I will sell in the money covered calls, to be honest.
How deeply do you go like in the money, or how do you determine that for yourself?
It depends like where the price is. Okay. I mean, like at this particular point, like if you ask me like before earning, I mean, to be honest, I expect the move around earning to be around 30% this time. Okay. I mean, of course, everybody builds model. I build a model. All models are wrong. Some are useful. Okay. But given the kind of run it has made, if it beats on earning that even fuel, I think there will be many in buying. And if it's just okay, I think the market will dump it. Okay, you can always go back and see how Palantir react around earnings. Okay, the move is always in the order of that. So I'm not expecting anything to be different this time. See, again, I think people have to understand, like people say, okay, if it is covered calls, your stocks got called. I mean, has happened with me in past. Okay. It's part of your risk management. Okay. And there is nothing wrong in that. I mean, you need to, people say like, just keep investing everything and just keep, man, at the end of the day, you have a life to live. Okay. I'm 45. I don't have to live life after 75. Okay. And
So
the
Sachin,
reason I think,
are you also on the 2030 time frame with Palantir, or are you kind of know when it hits your targets, you're out of it? You don't really care for a decade.
I mean, I don't even have to sell in 2030 if everything is going better at that particular time, or I don't get, I mean, I get better opportunities. Okay. So, I mean, why to sell?
Well, you have a yacht to buy. That's why.
Yeah. I mean, but it doesn't mean that I'm not selling covered calls. And see, no stock goes up, and you can be wrong at times. But that's what I say, that these strategies are more dynamic. Okay. Yeah. And you have to have patience. When Palantir was 18.99 at that particular time, nobody thought it will go to 16. It did go to 16. When first time it went to 17.3, nobody thought it will dip below 14. It did get. So there is, I mean, this whole idea of that market gets exhausted and there is some profit taking. These are real things. I mean, people have built their careers around it. I mean, if you are a buyer of market efficient theory and all those things, I mean, I have nothing to say to you. But at the end of the day, the kind of philosophy I follow, and I have told it earlier, I'm a big fan of market wizards. There is inefficiencies and things like this happen. Okay, sometime you will get it wrong also. Like people who were thinking Nvidia is expensive at 290, probably they may not get time anytime. Yeah. So it is. So if it happens, it happens. Okay, that is fine. I mean, there are like counter strategies that you can deploy still to make money out of stocks. If your stocks get called out, for example, you can say long dated puts, you can sell that. Okay, you can take a portion of that money and in nearest correction, even if it is above your called out price, you can still buy near term options. Okay, it might pay, it might not pay, who knows that.
Crossroads, go ahead.
Yeah, that's really helpful because I'm trying to figure that out. I've sold covered calls, not in the money, because I think you're right. We're going to see at least a 30% move. I could see easily us getting above 26 with just, everything hits just nicely or just dumping down. But we have a little bit of a volatile stock. But yeah, just imagining because I was not initially as far as a DPO investor, but I remember some guys that were original investors, and maybe some of them are listening to this, that they bought in at 10 and it ran to 45 and they didn't sell, and then they saw it go all the way back down. And it's like, I have for me, it's an 8.5 year time target. So I started the decade once I started my first buy, but I can adjust that a little bit. But I still, like, if we go to like 45 after Q2 earnings and they're just okay, it's like, man, I'm just like, okay, what would I do with those that are not, going to be called away? I don't think that's going to happen. I think it's pretty much impossible to happen, but sometime this year it could. Just the way that the AI momentum is building, Palantir continues to execute, and so I'm just like, okay. And I know, Amit, you're gonna just like hold on to every single share until
no, because I really like what Sachin just said. I mean, that a couple words you said just kind of opened my mind, right? When I said, do you want to sell 2030? He's like, why to sell? It's kind of like, if your expenses are taken care of, why? If it's a fucking like, are you selling Tesla at $1 trillion? No, I mean, the OGs are like, well, let's let that bitch run,
Yeah.
It obviously depends on a lot of execution from Palantir, so we'll see. But Adam, go ahead.
Go ahead.
Adam, then Sachin. Go ahead, Adam.
Adam, you go
I
first.
was going to say, all right, cool. I was going to say that to answer this, we were going over it earlier today. So I sell covered calls every single week. I basically make a salary, somebody's normal salary for the year, and I sell them weekly. Sometimes I'll buy them on Tuesday. I'll sell them on Tuesday. I only do green days, 20% out of the money. I'll take my 2 cents a share, maybe 3 cents a share normally, and I make myself a weekly salary. Now, you don't have to have as many shares. You can have less, but it's still additional money that you're making. on really green days, like I bought earlier today, I ended up getting 2.5 times premium what I usually do because it was a green day, and I sold like 28% out of the money for this week. So also, if you do get called and it's in a non-tax deferred account, you just need to have a credit line and you can buy the shares and you'll be okay. Or if it's a tax deferred account, what's the big deal? You sell them, you rebuy them, right? But you're also selling them for 30% on top. On top of that, you never actually have to sell your shares. Like Sachin and Amit were saying, wealthy people don't sell, they don't pay taxes, they borrow against, and they live their life. You only sell if it helps you achieve something in life. Buy a house, put a deposit down on the house, or, you know, something that's important in your life. That's what I wanted to say. But yeah, I sell them every single week, and it's super lucrative. Nobody takes advantage. It's absolutely absurd to me.
Yeah,
So-
Map Money I know does it, and I do it as well, and it's very nice, especially like on days like today. My goodness.
Real quick, Sachin, before you go, Jane, I see you requested on Twitter. After Sachin says his next thing, I'm going to let you speak, and then you'll be live for us. Go ahead, Sachin.
See, remember two things, that you always invest looking forward. So, for example, if you go back in 2021 when the stock was 25 and say you sell this covered call at 30 and the stock goes to 45 and you beat yourself. But on the hindsight, because it got to 45, you were called away. You maybe have saved pain when it was dying out. You might have found new opportunities. So it's all about how you invest and trade around your positions. Okay, if you are really uncertain about long term, taking some money off the table or selling some covered calls, yeah, you are losing upside, but you are also managing your risk. I think managing risk is underappreciated in investment. If you have capital and you can miss the best opportunities of your life, but you still have capital, you will still find more.
Nope, he is.
If you lose your capital, it doesn't matter, even the best opportunities are presented to you. So preserving capital is very important.
Yeah.
Okay, back to you, Amit.
Thank you, guys.
All right, Jane, you are up on Twitter. Let me let you speak. Crossers, you can stay on if you want.
Yeah.
So Jane, you're a speaker. Go. You are live to 419 people on YouTube and 50 on Twitter. You just have to click that mic button, that unmute button, and then you're good to go.
Oh, I'm sorry. Thank you, Amit. I appreciate your passion and your work. I had remembered some months ago that Alec Karp had mentioned that there'd been some interest in buying the company. And this is just something for the ether, a theoretical hypothesis, I suppose. But why would Lockheed Martin not want to buy Palantir? They could buy it and then spin off the commercial probably for the same amount of money that they paid for the whole company. And I don't know who else would be interested in purchasing, but he had made that inference. And it was just something that I had thought maybe a big military company just might want to buy it.
You're talking about on the earnings call when he says we've been getting requests, but we've
Indeed.
politely declined them. That's an interesting question. I've never heard this one. All right, so Sachin, let's have you answer that. Why would Lockheed Martin not buy Palantir?
Man, to be honest, I can only speculate on that part. Okay, I think the analogy I would like to pick for that is the analogy of Ford. How long it took Ford to actually acknowledge that they are not as good as Tesla in terms of software. So you need to understand that companies, and I come from oil and gas. I mean, it's a very alpha male kind of companies. We always look down upon everything else everyone else is doing. So first thing is, when you are in these companies, and you have recently seen what happened in oversight committee, that these companies are too powerful. These companies are too much in bad with government. Okay, at that particular point, to buy something and to acknowledge, their first question is always this: now, why can't we do it ourselves? All we need to do is find some nerds from Silicon Valley and put them together, and they will write something. Okay, because you cannot buy it if you cannot appreciate it. I think there's an example I was
Right.
looking a day before yesterday, and this was a mail from I think Larry Page, and Larry Page was asking the company, I think he was asking Eric in one line where we are at YouTube, and this is January 2006. They acquired YouTube in November 2006. YouTube came in existence in April 2005, and you see how fast they identified it. Okay, so I don't expect that happening. And if you see, like Raytheon has a partnership with C3. Okay, so at this point, these companies are still learning that software is going to be the major play. And yeah, I think in future they may try, but yeah, I think the arrogance and their business model, I don't think they will ever appreciate it.
Okay. Adam Crossroads, any thought on Lockheed Martin acquiring Palantir?
I don't think any of them took him seriously. The contracts that I was talking about earlier, the original ground system was made in coordination with Raytheon, IBM, Lockheed Martin, and the new system that they lost that they were trying to upgrade was without IBM. They were like consultants. None of them took Palantir serious. Palantir had to fight to get in there, and that's how they became a software prime. So nobody wanted to buy Palantir because they didn't think Palantir has any worth. They're like, right? They're like, who is Palantir? Like they literally called them in the reports. You'll see a small-time Silicon Valley company. Like nobody knew who they were. Nobody considered them at the time. They were worth like $1 billion, maybe nothing. So they said, why would we invest in this company to buy them? So that's one. Plus, they have the FU shares. They wouldn't sell them anyways, right? And they were backed by Peter Thiel, who didn't really need the money at the time. So that's what I think. But they weren't even on the radar. That's what I think was in actuality.
See, in my opinion, there is only one company that will ever acquire Palantir. Okay. If it finds some way to get around those founder share, and that is Microsoft. There is no other company will ever acquire Palantir. And there are clear reasons for that. First is, if you'll see in terms of cultural fit, Palantir doesn't have a cultural fit with companies like Google. Okay. Now, Palantir is very critical for defense establishment. So that means somebody in the US government has to give you the blessings to acquire it. And those kind of blessings are only available for Microsoft. They're not available for Amazon. Okay. And I mean, somebody has to buy. So it is 40 billion. That means you have to pay a 50 to 60% premium on that. Microsoft is a kind of a cash machine that can generate that kind of cash. So which is very unlikely, any company will ever buy Palantir, is going to be Microsoft.
And as far as the military, like there's a long history. So since the 30s, the United States military has really been focused on hardware and getting bigger and better hardware, better tanks. And there's many reports that are like, hey, there's way too many tanks now, bigger aircraft carriers, that sort of thing, just because that's the way wars have been fought and won over the last 80 years. And since really relatively recently, and I think ChatGPT started changing some things, but the biggest thing for the military is the war in Ukraine. AI was seen as something that just kind of adds a little bit, extra. Maybe you have a 4 or 5% more effectiveness. It's good. It's worth pursuing, but it's not something that you should actually devote substantial time and attention and focus to. It's not that Lockheed Martin wouldn't have done that, but it's one of those things that Palantir is talking about, is encouraging the U.S. military, which be beneficial for the company, but also good for the country, to have a certain percent allocated towards actually purchasing AI and software, because this actually, and Ukraine is proving out this thesis, this is actually where wars will be fought in the future, and they are being fought right now. And usually the military is one of those things that it lags behind, and once they finally realize it, then they want to really go all in. So a good case in point is the aircraft. Initially, when the aircraft was being developed, it was seen as basically something that was just for reconnaissance only. And then if you guys start taking up some grenades and different bombs and hand dropping them over, and they're like, that actually works pretty good. And then bigger and better, of course, now we're here to just amazing aircraft and capability. And AI is just like that. It takes a little time for the military that's used to doing a one way for a long, long time because it works, and then seeing that shift. And we're seeing that with Ukraine.
So three things have to happen, in my opinion. Like, I mean, I agree with what Crossroad was saying. The first thing has to happen is that military has to realize that they can sell a lot more smart weapons. Okay, for that AI becomes more important. The second thing is the military has to realize that they can use AI a lot for the reverse engineering things. I mean, based on the last oversight committee, that there's a lot of reverse engineering activities happening, and for a lot of things you don't have clue. So second part. The third part, I think this is where I think we need to focus is we need to focus on a company like Endural. See, Endural is a kind of a pure play when it comes to build hardware with software. Nobody else is doing. So if Endural start winning larger and larger contracts, that will force hand of legacy industrial military complex to take it even more serious than it is today. Okay, if these three things happen, the momentum for Palantir in Palantir is already in military when it comes for data analysis, analytics, kind of a strategy building. Okay, but in that particular case, if it's integrated in a larger domain, and again, I mean, it's a point that people get very sensitive about it. But the reality is AI will be integrated in weapons. We like it, we don't like it. Okay, US doesn't do that.
And
Somebody
it
else will.
actually might reduce casualties. That's the side people don't talk about, right?
I mean, that's the thing is, see the thing is like what you're talking about, Amit, is a lesser evil theory.
Yeah.
Okay. The theory that street follows is virtuous signal theory. It's everything has to be as written in their own manifesto. Unfortunately, that doesn't happen. Okay, so to me, I think that the key point is the success of Endural in this domain, because there is no other company. See, Palantir in defense is a pure software play. If you look at the companies like Raytheon and Lockheed Martin, and as much I know from public domain, they are mostly hardware play with some software integration. Okay, and at best, even the software integration as it is done and as much information is available, for example, in the case of F-35 delays and all, it's pathetic. They just somehow put things together because the, the the reason is that they don't design hardware around software. They design hardware and then they find out what software will go in, as the legacy car media or auto media was doing. Now what happened, like when Tesla came, they designed software and hardware around each other, and that's what Endural is trying to do. Because see, when you design a hardware around a software, you design different kind of hardware. So your manufacturing, your cost curve, your output of the product is entirely very different, and then it becomes a kind of a competitive advantage which is very difficult to beat. So Endural success in that domain is critical. Okay, if Endural is getting more and more revenue, which means Palantir will get more and more revenue also.
Yeah.
But as far as traditional companies like Raytheon and Lockheed Martins are concerned, yeah, I mean, I don't count for that a lot.
Yeah. All right, that's fair. I think I'm gonna be on for like another 10 minutes and wrap up some final things. But thank you, Sachin, Adam, and Crossroads for being on. Adam will be on with me tomorrow morning for the market open, so we'll discuss a little bit more about what he found with some of this investigative journalism he's been through. And Sachin, follow him on Twitter because he's dropping a lot of dimes on how he's playing this Palantir position. And I think he's one of the premier people to follow the price movements of Palantir because he actually knows what he's doing in terms of looking at it. So, Sachin, do you believe in technical analysis or no? You're a believer of it, right?
I'm a believer of it based on the evidence I have seen. So, see, my view is that, I mean, you need both. Okay, to find the right combination of fundamental and technical is probably the rarest thing that anybody can get done. And like I said, I mean, I have seen many people who knows nothing about fundamental analysis and they have made a lot of money just by technical analysis.
Yeah. Yep.
Okay, but technical analysis, see, I think what people miss about technical analysis is that they think they'll read the book, they'll read the patterns, and that's it. See, nothing is 100% and 100. How you improve yourself. Okay, I have said it several times. I mean, read about market wizards. Okay, read about. I mean, that book is one of the best evidence that why people are successful in technical analysis. And that book is also one of the very good evidence that there are people who knows nothing about fundamentals and who knows nothing about technical analysis, and they still make a lot of money.
Right.
Okay, so I mean, I'm a believer in technical analysis. Is it the answer of everything? No.
Okay. Yeah, and I think that's why people should follow you, because you have a good dose of fundamental and technicals to try to give a.
I mean, you see, yesterday it was 19.9995 before it came down. This is a typical activity, a high frequency trading that happens because round numbers have significant importance in technical, like 15, 20. So they knew that once it reaches 20, a lot of people are going to sell. So we'll just going to sell a bit fraction below it.
Mm.
Okay, so these things exist. You like it, you don't like it, but they are there. Alternatively, you can go and believe in random walk theory and markets are efficient and buy index fund and never look your portfolio.
Okay. All right. Thank you for joining, Sachin, Crossroads, and Adam. Adam, I'll see you tomorrow. Crossroads, I'll definitely see you eventually. Thank you for joining. And Sachin, we'll talk soon. Bye.
See you, man.
All right. I am still here for another probably 15 minutes. Let's close out 2 hours. We're at 1 hour and 40 minutes, so we might as well close out 2 hours. Twitter, anyone got any questions, please request or comments you want to say. The show goes on, as they say, and we can get some more questions in from anyone on Twitter. And we can also anyone on YouTube as well. Now, there's one thing I want to talk about, and we'll see if anyone has a question or wants to say anything. But it's a subject I want to bring up. I brought this up in the SoFi earnings call as well, because I thought this was a really interesting subject, which is, I tweeted about this last night, which is this concept of like actually holding. And Grogu, I see you in the chat as well. Grogu had a really great tweet a couple days ago, or a couple hours ago. And the tweet was, if you've never been through a 10x or 20x in your entire life, you kind of don't know what it feels like to hold, right? You don't know what it feels like to actually maintain momentum. The reason I'm so adamant on holding Palantir till 2030 is because I don't know if it's a 10x, 20x, 5x, whatever it is, but I do know that one of the things I'm trying to learn as an investor is, or as a human being, is how to allocate capital to companies that can grow based on my capital and the due diligence I've done. And one of the things my parents never did was understand this at a fundamental level, right? They came from a different generation, came from India. They didn't really understand investing, all that type of stuff. And so I kind of feel like it's an obligation I have, because if my sister doesn't care, right? If it's not me who's going to start the trend of understanding financial freedom at a deeper level, and you can do it through real estate. There's a lot of different ways to do it, but I think the stock market is the one thing that appealed to me the most. If I don't do it in my family, no one's going to do it. My kid, if I don't do it, my kids are never going to do it, right? Or maybe my kids will do it one day, but it might happen by random. So I've got to kind of take that obligation. And as a result of that, part of being an investor is engaging in the upside and enjoying the process of being up on a company that you've done a crap ton of due diligence on. As Zocolt says in the chat, patience, P-A-Y, Shents, and being actually patient about an investment going up. I know, I bet I'm in some options, and like, yeah, in a year, maybe those options do well, but those options are not like real investing at the end of the day, right? Hopefully they make some money from our portfolio and it's great. But what real investing in is making the stake in a ground and saying, I believe in Google, or I believe in Nvidia, I believe in Palantir. And you believe in them. You actually believe in them. That doesn't mean don't sell. That doesn't mean never take profits, but it does mean like, look, you don't sell Nvidia 290 or 287 when the world is saying it's overvalued, if you actually understand Nvidia. I have a friend, I think you guys know him, Dom from Dominating Investments. He's up a lot of money on Nvidia because at 280, 290, he didn't listen to anybody. He listened to himself and he did not sell that stock. And now, the stock's probably going to 500. And if anything, over the next 5-10 years, who knows where it's at, $2-3 trillion, whatever it is, if AI is going to continue to be as significant as it is right now. And so he's going to be a millionaire off that stock. And he's getting close. And I don't know if Palantir is that, but what I do know is that I think it's a little early to want to be like, well, it's over. And I think that's why it's such a good thing Sachin said at 2030. It's like, well, why do I have to sell? At 2030, if it's done what we thought it could do, why? If you want to go live your life and take profits, sure. But if you're at a stage where you can keep capital compounding, I feel that there is some obligation to let that capital compound if you went through the intellectual hard labor of trying to figure out where to put the capital in the first place. Because anyone can put it in the S&P. Anyone can put it in a 401k. The reason it's in an individual stock is because you've done some level of due diligence, where you feel there's an outsized opportunity here. And you don't have to be right, but if you are right, you might as well not go left. You might as well keep being right and see what happens from there. And so I think from that perspective, this is what I experienced with SoFi today, right? I am up a lot on SoFi today. I mean, I am up more money than my dad used to make when he was in America for a full year working at the jobs he was at. And I'm up that, and it's like in a couple of months, and it's because of due diligence. It's because of actually understanding a market opportunity and trying to take advantage of that, and then trusting what would happen if that market, you got to take some risk, right? You got to take some risk if you're trying to gain financial freedom. But if it's a calculated enough risk and you can actually hold on to it, it's not the worst risk in the world. And a lot of things can happen. Zocolt says, it feels so good when you get that 10x, then put it into another investment that is cash producing. And I've never had a 10x in my life. I don't know if anyone else has that. You can put it in the chat if you've had a 10x, but getting a 10x is hard. It's not easy. And so to actually see an investment go up 1,000% and 10x your money, it's not easy. It takes time, and that's okay. But part of the journey is like recognizing, hey, is this a company where I want to even see the potential of that 10x happening? And if there is, then I think it's worth understanding a little bit more. Amit asking again, what price do you buy Palantir? I mean, it depends on Q2 earnings. At 20, I definitely don't buy. I'm not excited at 20. At 14, I think is reasonable. I mean, 13, 14, I think is reasonable given how the macro has changed. If earnings shits us to the bed and it's at 12, 11, I think that's a perfect price. I didn't think 13 is fine. But I kind of think earnings are going to be good, and it goes past 20. And so that doesn't mean I would buy past 20 because I think it can then sell off. But I don't think 20 is justified right now. Now, if Q2 earnings hits it out of the park, then maybe 20 is a steal. But we just don't know. And the numbers have to really determine a lot on that aspect. Again, on Twitter, if anyone wants to request to be a speaker, you can request right now. We got about 15 minutes left, or 10 minutes left. And you can request. StreamYard link is in the YouTube chat. If anyone wants to join and ask a question, feel free to join. And then we'll keep going. Franco James says, don't worry, it'll go back to 11. So, you might be right, Franco. You might be right. And that's the fun thing, because none of us freaking know. And so it'll be fun to see where it goes from there. Austin says, I believe in maintaining a certain portfolio allocation at minimum to core high conviction holdings, but also knowing when to over allocate during extreme undervaluation and then trimming back down. And that's the hardest thing in the world to do, to actually say, okay, this thing is undervalued. It's time for me to get a little bit more upside from here. And that's the one thing I didn't do Palantir at $7-8 because I was so bullish that I got a bit more skeptical about valuations. And I don't blame myself fully because they weren't executing, right? The market kind of executed AI for them, and they kind of filled in the blank, which is why I missed the Palantir run as much as more than I wanted to have missed it. It was a market externality that they fit into, and then the market rewarded them with the premium. It wasn't they had a blowout quarter, and then even when they got GAAP profitable, it shit the bed because it wasn't real GAAP profitability the first time it ran up. And so it kind of just happens the way it is. But if there's extreme undervaluation, then it probably makes sense to outside a little bit more. Palantir Hotline says, hello. Can't believe we're here back in year 20. It's been a long time coming. Now, here's the interesting thing tomorrow. I don't know if 20 maintains. I mean, where's the futures right now? Futures, if they're red, you'll probably see 20 go down very quickly. Well, we ended after hours below 20. Futures are green. So futures are green. So we're getting some, so all futures are green. So we might see a little bit more upside. But again, we have no idea. Holding 20 tomorrow would be insane. I mean, if we hold 20 tomorrow, that would be insane. Matt says I did an entire live stream and it is still going. That's why you left, Matt. You're doing your own live stream here. Don't forget luck, Amit. Don't attribute too much to yourself. Yeah, I mean, that is also very true. I think you're saying it in the context of Palantir running up massively. A lot of it also has to do with timing of luck. Obviously, my average is 15, so I didn't get to benefit from all of that luck. But a lot of the run up, it was lucky that ChatGPT went mainstream. It was lucky that the venture market started realizing AI is the next big thing, not Web3. It was really lucky that Sam Altman made it a point to implement one of the craziest consumer-friendly AI products into the market, exposing hundreds of millions of people, if not billions, to what AI is. And then Snapchat and Quora and Facebook and all these guys copied with these little chatbots. And it created the modern-day conception of what an LLM is. And that's, allowed the market to be where it is right now. What else do we have here? $20, 2025 leaps are printing. Yeah, there was a lot of people actually that I know that got $10 and $15 leaps as well for 2025. Even, you know, at $7-8, even 15 seemed insane. I remember I sold a cash secured put at $9.50, and I thought I wouldn't get assigned the shares. And then I got assigned the shares. And I was like, damn, $9.50. Like, I'm overpaying. Palantir was at $7 at that point. But I was like, fuck, I can't do anything. I got assigned the shares. Now, $9.50. It's like, goodness, $9.50. What would this be? Me now says Palantir will easily go to 30. I've seen these types of companies go to the roof until it falls. Facebook, Google acted the same way. And I think this is the fundamental question over the next couple of months. Like, does it easily just go up to a crazy valuation that maybe can't be justified because it is a tech stock and the tech stock is getting more momentum and Wall Street's starting to appreciate it more and this and that and a crap ton of other variables? Or does it actually have to have the revenue growth to show the justifications? I hope it's the latter, because I don't want a $45 Palantir 2021 meme type situation. I mean, there was no way in hell it was worth $100 billion then. There's no way in hell it's worth $100 billion right now. And so personally, I would love consolidation at this range. That would be phenomenal, even towards the end of the year. And if there is a little bit more upside, then hopefully that's baked in because there's actual growth in revenue to justify the numbers. I personally do not want an AMC type of stock. It's not the exciting type of return I'm looking for. I want it to be slow and steady, especially with a company like Palantir. And hopefully we'll see keeping going from there. Facebook, Google, Amazon went through crazy valuations as well, and then it grew to its revenues. That is correct. And that's why I think Dan Ives also was like, yeah, like Palantir will be at that, hopefully at that level as well. Matt says I bought Enphase. You'll have to watch the live stream to find out about it. I think Enphase is at a really attractive price right now. I really, really do. It could have dipped lower if we get a correction, 1,000%. We're heading to a 130, 120 if we get a market correction. But the question is, are we getting a market correction? And I think that's going to be the focus over the next couple months as earnings comes to an end. Obviously, earnings have been good so far. We'll see in the next couple weeks if earnings round out being okay. But if earnings comes to a good positive ending and there is no need for a market correction and Q3 earnings are okay as well, it's going to be very interesting end of the year. Now options are too expensive. I also agree with this. Options on Palantir right now are pretty expensive because the stock has run up 200%. You don't buy options on the underlying when the underlying is up 2x. It's you got to get in before, and if you missed it, you missed it. Now, if Palantir goes to 25, yeah, maybe a $25 leap is looks nice right now, but the odds and the probability and the theta decay, if maybe if it's a leap, then you don't have to worry about too much about that. But I would not play earnings from an options perspective. I was thinking of playing earnings from I was thinking of $20 leaps 2 weeks ago, and I was just like, when it was at like 15, and I was like, $20, like it's a lot to justify. Now it's it's at 20, and now it's like those $20 leaps would have printed, and so it's all relative, but it's hard to buy the options when the underlying is up. Big Ray, I'm not going to read that comment out loud. All right, I think that is it for me. I know this was a little bit of a hectic of a Palantir daily live stream because I know we had a bunch of guests join and we were trying to manage a bunch of different things. Usually it'll just be me and then some questions from the chat. I know we obviously running to 20, we just had a bunch of people that wanted to chime in and get their thoughts. I think it was important to get Sachin in and Adam in. So tomorrow we'll do the market open. We'll talk more from there. Matt, you will have to join one of these streams a little bit later this week. And who else was here? Big Ray, you got to join one of the streams as well. I got to just interview you and talk about Palantir as well, since you're doing a ton of unique covered calls, options, all that type of stuff. So we'll get you on it as well. All right. That is it for me. Have a great last day of July. We've got August tomorrow. It's crazy. We are 7 months into the year going into August. No, 8 months, right? Yeah, August is the 8th month. So we're done with 7 months going to 8 months. AJ, I do not hate you. I love you. Have a good night. God bless. You're super funny in the chat, so I love you. Miyoko, I see your heart in the Twitter chat. Thank you for that. And thank you for joining. I appreciate it. It was an awesome day. We'll see what happens to the stock tomorrow, but regardless, it's cool to be part of this company. And again, for me, it was just cool seeing $20 on the dot. I actually got a haircut. I came out of the hair salon or the barber. I don't know why I call it a hair salon. And I look at the share price. It's $20. I take a screenshot and it was just 20 on the dot. And I was like, this is pretty cool because we've been talking about this bad boy since it was 6. Probably going to go away soon, but it's pretty cool to be along this journey and pretty cool to see everyone else being here as well. So thank you all for being here. We'll see you tomorrow, 9 p.m. and we'll keep going from here. Have a great night, everybody. Good night.